October, just 16% of the consumers said they thought now is a good time to buy a home, according to Fannie Mae. According to the Mortgage Daily News, fast rising interest rates are what turned the red-hot housing market on its heels in early summer. The average rate on the popular 30-year mortgage started the year near a record low of 3%. By June, it had crossed 6% and is currently over 7%. Joining us today is Rick Michael, Senior Vice President at Guaranteed Rate. And Rick, how long have you been in the business?
Thanks, Hank. I've been a loan officer in the mortgage lending industry now for over 32 years.
So Rick, I'm going to share a couple of charts really quick and then love to get your insight on ways that consumers can win in today's market.
Sure.
First of all, we're going to look at the historical 30-year mortgage rates. And as you can see, today's rate is really right around that historical average. However, most consumers today have never seen rates like this. As you note, beginning back in the early 2000s, rates were consistently declining. Even more important is the current 30-year mortgage rate for this year. In January, it was 3%. Now it's 7%. So quite a shock to the consumer.
That's right.
And I think the leading reason that the housing market has slowed down. So the bigger challenge is really how the rates have risen this year. And Rick, the number one reason that people move is life changes. And life changes are going to continue to happen. So what we want to talk about today is how do you navigate the current mortgage market?
Sounds good, Hank. Well, as you mentioned, right now, there's a lot of people sitting on the sidelines, waiting for interest rates to come down. As most of you know, the Fed is currently raising the overnight lending rate, trying to slow down the economy. And eventually they're going to be successful, probably within the next 12 to 18 months. So when they do become successful, you're going to see interest rates drop. And a lot of people are waiting for that to happen. But the thing is that the people that are waiting for that to happen, there's a lot of them. And if you want to wait for that to happen, you're probably going to pay a higher price for a home then than you will now. Right now, you can get a better deal on a home now. There's not as many competitive offers right now. Mm-hmm. So, we have a little saying right now, and that is, marry the home and date the mortgage. And what we mean by that is, if you can find a home right now that meets all your needs, and you can handle the mortgage payment right now, you should buy it and then plan on refinancing later when mortgage rates come down.
So let me ask a question there, Rick. I'm hearing a lot of talk about a 2-1 buy down.
Yes.
What is that?
So that's a great program that a lot of people are taking advantage of right now. So as you mentioned previously, interest rates are around 7%. A 2-1 buy down allows you to take advantage of a lower mortgage payment now, and then you don't lose any money and you can refinance later. And you can do that with a 2-1 buy down. The first year the interest rate would be 5%, the second year the interest rate would be 6%, and then years 28 through 30 would be at the 7% if you get to that point. So if you're looking at a $500,000 purchase on a home, for example, and you're putting 20% down, borrowing $400,000, if you're doing a 2-1 buy down, the first year's payment might be as much as $500 or $600 a month less than what the payment would be at the 7% rate. And then the second year would probably be in that $300 a month less range. This will allow a consumer to get into a home at a lower mortgage payment now, and then when rates go down, take advantage of the lower rates and refinance your mortgage then.
So that's a huge savings. That's thousands of dollars per year. And the anticipation is the interest rates will begin to come down, especially if we go into a recession. We've seen that historically.
Yes.
Mortgage rates decline during a recessionary period, and I think there's a good chance we'll be in a recession. So you take those savings now, refinance when the rates are more comfortable, say 4.5% to 5%, wherever they go.
Right.
And you've saved thousands, maybe tens of thousands of dollars. The other one, I guess I would ask though, why don't you just do a permanent buy down?
Well, and it's a good point. So the difference between a permanent buy down and a temporary 2-1 buy down is a permanent buy down, one point usually equals about 1/4% reduction in the interest rate. 1/4% on our previous example is only going to probably reduce the payment by about $80 or $90 a month, as opposed to a 2-1 buy down, you're going to be able to reduce the payment by hundreds of dollars per month. So, and the other thing is with a permanent buy down, usually has, because it only drops the payment so much, it usually takes about 4 to 5 years to recoup the cost of that buy down. As to where with a permanent buy down, the money is paid by the seller, it's put into an escrow account to buy down or subsidize the payments, and then when the buyer decides that it's time for them to refinance, any money that's left in that escrow account that was subsidizing those payments is deducted from their payoff. So they lose absolutely nothing. They can get
That's fantastic.
yeah, they can get into the house they
I love
want
that.
at the cheaper payment now and not have to worry about, well, if rates go down and I refinance, do I lose, anything? No, you lose nothing. So that's really the big advantage of a 2-1 temporary buy down versus a permanent buy down.
So, what percentage of your loans are you seeing with this buy down now?
Well, we're not seeing a huge percentage right now. The number is still less than 10% because it's still gaining traction and people are still trying to understand it. There's a lot of myths out there surrounding the temporary buy downs, like, well, if you do that, you lose that money when you refinance. That's not true. So you don't lose anything. And that's the benefit of doing a 2-1 buy down, is it allows you to get in the home that you want now at the lower payment and not really have anything at risk.
Yeah, that sounds like a great idea and a great plan. And as Rick mentioned, we're really seeing this gain traction relatively recently. And from the real estate agent perspective, there's a great chance that you can negotiate this and have the seller pay the buy down for you, and it actually works out for both the seller and the buyer.
Yep.
Because it's really much better for the buyer to have a significantly lower monthly payment versus, say, saving $10,000 on the price of the home.
That's right. And the average 2-1 buy down costs somewhere around 2.2 to 2.25 points, and that has to be paid by the seller. That the buyer cannot pay that themselves. It's also a great tool that real estate agents and builders can use as opposed to lowering the purchase price of a home.
Awesome. Well, I think we've taken about all the time we have today. Rick, I'd love to get together with you and talk more in the future, and hopefully this has been super helpful for everybody out there. Please keep myself and Rick in mind for your real estate and mortgage needs. We definitely appreciate you watching, and thanks so much for joining us, Rick.
Thank you, Hank.
It's been great. Talk to y'all later. Bye.
Bye.